renewable energies in Europe. So welcome everyone. I see that some more participants are coming in, so I wait for another minute so that more people can join this seminar, this webinar. I see that you already make use of our chat. Everyone is welcome to participate in that and to contribute to the discussion. What you can also do is that you ask your questions, if there are any questions, during the presentation in the next half an hour or 40 minutes, so that at the end the speakers have the opportunity to respond to your questions. So type in some questions in the chat and we hope we can get back to you and respond to your questions. Right. So I suggest we just start. Welcome again to all of the viewers and participants of this live webinar. This is the third live webinar that we do in the course of the EurObserv'ER project. A warm welcome on behalf of the EurObserv'ER team and also of the RENAC team, the Renewables Academy. We are in charge in this project for the dissemination and communication activities. This is why this is streamed via this Adobe Connect tool. But a welcome to all of you. I hope that everyone can hear us well. I do not see anything else, any comments that this isn't working. So I would really briefly introduce to the speakers today. So my name is Roman Buss. I'm from the Renewables Academy. And in a minute, I will hand over to Diane Lescot and Frédéric Thuillet, who come from the project lead from Observ in Paris. Also part of this consortium is the Frankfurt School. Carol Kemper is here to speak on behalf of the Frankfurt School. We have Luc Burskens and Mark Masidi from ECN TNO from the Netherlands, which are a long-time partner in this project. And finally, last but not least, it's Barbara Breitschopf from Fraunhofer EC in Germany to contribute to this presentation. So now you have a brief overview of who we are. We would briefly also get a bit better to learn who you are. This is why we have just briefly prepared a poll where you can participate and just indicate your background. So where you're from, what are you doing. This is of interest for us because to get to know better the learners. Raquel, could you please include the short poll? So you can really quickly type in what field of activity you're involved. Is it renewable energy? Is it rather another sector? Is it transport, energy efficiency? Are you rather from the media, information, public awareness raising, educational background? You do not have to do that. It's just to get an impression of you as the viewers of this seminar. Right, quite a lot of renewable energy related individuals here. Yeah. Okay, yeah, quite interesting. This is quite clear picture. So a bit of awareness raising, public information, media, but largely you're really involved in renewable energies, which is of course also the background of the EurObserv'ER project. We are monitoring and targeting the renewable energy scene in the European Union. And thanks for that vote. We have another second question. Raquel, if you could just include that poll as well. We would like to ask you in what type of organization you come from. What's your background? Are you from a government institution? Is it rather a non-governmental organization? Or is it more a research background? Or industry or media? Okay, so there's a slight tendency, I assume, for the research arena here. Yeah. Some NGO representatives or energy agencies, but okay, the around 40% are from a university or research background. Yeah, quite interesting to see that distribution of your votes. Great. Thanks a lot for this. So what we will do in the next hour is indicated here in the agenda. I will hand over to Diane Lescot in a second. She's the project director, the project lead. She will give us a brief overview of the project, what we have been doing in the past, what we have been doing now. And then we go through chapter by chapter through the content and the main results of our published report, starting with the energy indicators from Observer, some socioeconomic indicators from ECN, Mark Marsidi to speak on behalf of ECN, then some investment indicators from Carol Kemper from the Frankfurt School, and some cost and competitiveness and avoided fuel use information from Luc Berskens. He's also from ECN TNO. And finally, Barbara will finalize this presentation. Again, highlighted, if you have any questions, please type them in the chat. I will have a look at it, and in the last 20 minutes, after we have 15 to 20 minutes to respond to your questions. If they are open questions, we try to do that. Also, the slides will be made present, will be made available after this webinar on the project website, where you can also download all our reports. That's it from me now. I hand over to Diane. She will give us a brief overview on the project and the next steps. Thanks. Diane, are you there?
Hello. Thank you, Roman. Hello to everyone. So I'm Diane Lescot from Observer, which is the French Observatory for Renewable Energy. It's an association promoting the development of RES. So I will introduce you now to the project by giving a brief overview. Observer has founded the EurObserv'ER barometer, and this was done in 1999, and we have been coordinating the project since then. The EurObserv'ER barometers have been financially supported by the European Commission since 18 years. The aim of the project is to provide technical support to the European Commission in the monitoring of the development of RES in the European Union and in each of the individual member states. To this extent, the project delivers indicators, analysis, and graphs in order to cover all the dimensions that can be impacted by the development of renewable energy technologies in Europe, which meaning energy production, costs, investments, employment and turnover, innovation, and trade. Our team publishes two kinds of barometers. The thematic parameters, which can be visualized here. They focus on one RES technology only, and they are published every 2 months. And we also publish what we call the overview barometers, which are an annual publication and which is published in February. These publications address a very large public as policymakers, public bodies at all levels, EU, national and regional level, RES industry, financiers and developers, promotion organization and bodies, research institutes, energy experts, European media. Since project start, we have published 131 thematic barometers and have released the 18th State of Renewable Energy in Europe just a month ago. The thematic barometers deliver every 2 months the most up-to-date energy indicators and trends in policy and industry sectors on one of the following of the 8 following sectors: wind power, photovoltaics, solar thermal and concentrated solar power, biofuels, heat pumps, biogas, and solid biomass. We provide estimates for the immediate preceding year for energy indicators, and we do that thanks to a data collection in a network of sources that we have identified throughout the years. The policies implemented in each member states are surveyed in order to account for specific development in some countries. And we also highlight the trends that are animating the industry in the research part of their business, the movements in developers and manufacturers, and so on. And we compare our estimated projections of where we will stand in 2020. We compare that with the EU target. This is our publication schedule for the thematic barometers for the next 2 coming years. So as you see, we are now working on the photovoltaic PV sector. We will then produce the solar thermal and CSP barometer, the biofuels. For the first time in the history of the barometer, we will tackle ocean energy in fall and solid biomass in December. Geothermal, hydro, and municipal solid waste are covered by a specific data collection that is carried out at the end of the year in the course of the preparation of the annual barometer. After all thematic barometers have been published, we start to compile information on energy data coming from these barometers, and in order to publish these data in the energy indicator chapter of the annual publication. And we also start working on 6 additional topics that are not covered in the thematic barometers that are listed here, and to which we devote a whole chapter, the results of which will be presented in the rest of this webinar in a minute. Before I leave the floor to my colleague Frédéric Thuillier, I would like to mention our website where you can find all documents we produce. We devote an area to the press where all graphs and figures can be downloaded from all the thematic parameters that were published. We also give access to a brand new database that has been developed and uploaded in the beginning of this year. And we give in this database the possibility to do all queries and to download in Excel files the data that are in the thematic barometers and in the overview barometers. In 2018, we have counted around 80,000 downloads of the various documents that are uploaded on our project website. So you see, this is a quite well-known project. Barometers are translated and disseminated in French thanks to the support of the French Energy Agency, ADEME. And now we would like to share with you the main results of the latest issue of our annual publication of the State of Renewable Energies in Europe. And I give the floor to Frédéric for the energy chapter.
Thank you. So hello everyone. On the energy chapter of our overview barometer, so each renewable sector is presented through every indicators about capacity installed, total capacity operating, or energy generated. 12 renewable technologies are covered and figures are given for each European member state. This project is building on the know-how acquired through 20 years of experience of data collection and creation of a network of experts throughout the EU members. On this first slide is about the electricity generation. So, despite not a positive climatic condition for electricity in 2017, renewable sources have produced 30.2 7% of the total electricity generated in EU 28. 1 year before, this share was 29.6%. 975.2 terawatt-hours have been produced from renewable sources during that year. So, as I said, due to bad climatic conditions characterized by very low rainfall level, hydroelectricity reached an historically low production threshold in 2017 of 300 terawatt-hours. So, for 2017, the first renewable sector for electricity production was wind power with 362.4 terawatt-hour. The third is biomass, gathering solid biomass, biogas, and municipal solid waste. And photovoltaic comes in fourth position with 111 terawatt-hours. Concerning countries' position, 13 member states are above a threshold of 30% of RES in their electricity generation, and 5 are above a 50% share. At the bottom of the graph, 4 countries are under a 10% share. Now, this slide is about heat and cooling. So, with 102 million of ton oil equivalent, renewable sectors has reached a 19.5% share in 27. Yeah, 1 year before this share was just 19. The evolution of these indicators is directly linked to the development of renewable sectors, but its analysis is made difficult by the succession of mild winters in Europe, a consequence of global warming. Indeed, the heating needs are directly correlated with the average temperature level. Regarding heat and cooling consumption, solid biomass remains the first sector with 80.3 million of ton oil equivalent, almost 80% of total renewable heat production in Europe in 2017. Not surprisingly, the renewable share in heat consumption is higher in forest countries, especially those located in the northern part of Europe. If we take a look at the global picture, 10 member states are above a 30% thresholds for RES in their heat consumptions, and 4 are above a 50% share. At the opposite, 6 countries are under a 10% share. Now, the last part of my presentation is about the share of energy from renewable sources in gross final energy consumption, which remains the main European objective for renewable sources development. The 2017 results is 17.5%. 1 year before, this share was only 17%. The European Union is now only 2.5 points to go to meet its 2020 target, but bearing in mind that this share must be at least 32% in 2030, according to the targets validated by the Council of the European Union in last December. Each EU member state has its own 2020 target. The national targets make allowance for the starting point situation, differences as well as the renewable energy potentials, ambitions, and economic performance specific to the member states. At the end of 2017, 11 member states have already met their European targets for 2020. Despite most of the countries are on track to make their own target, the 20% overall target will be very hard to meet. The current growth pace across the European Union is too low to achieve the 2020 target. While it dropped to 0.5 point in 2017, it should be at least 0.83 point every year between 2018 and 2020 to achieve the 20% target. So every member state has to stay focused on their own efforts and trajectory. So I'm done with my part, and now I hand over to Carol for the investment indicators. Thank you.
Thank you very much, Frédéric. Carol, are you there? Mike Mosidi?
Yes, but I think it's Mark first.
That's true. Mark, are you there?
Yes. Can everybody hear me?
Just before you start, there was one question in the chat that asks what MTEP is. MTEP is the French abbreviation for megaton of oil equivalent. So that is the explanation for that abbreviation in text. So, Mark, up to you.
Yes, thank you. Hello, everybody. My name is Mark Mercedi. I'm a renewable energy consultant working at the Energy Research Center of the Netherlands, ECN. The following slides will discuss the results for two parameters, gross employment and turnover related to renewable energy in the European Union member states. An important methodological change has been implemented since the 2017 edition, where we designed and applied a modeling approach to assess turnover and employment related to renewable energy deployment. For this 2018 edition, we have used the same methodology and we have updated key input data for each member state. Examples of this key input data are, for example, the amount of megawatts solar PV installed or the amount of import and export of wind turbines per member state. Also, in September of last year, a survey was sent out to relevant stakeholders, giving them a chance to provide their opinion on the 2017 edition results. Their feedback was considered whenever possible in our calculations for the 2018 edition. So the results. Our analysis shows the following. For 2017, we have found for employment 1.45 million jobs and a turnover of 155 billion euro, which is a small increase compared to 2016. Wind, solid, biomass and biofuels are the largest renewable energy sectors in terms of employment and turnover. And as for countries, Germany, Spain and France are the largest countries in terms of turnover generated and employment involved. This slide gives a brief overview of the most important developments from 2016 to 2017. We have seen a notable growth in FTE in the wind sector, the biofuel sector, the waste sector and the geothermal sector, which is good, but also there was unfortunately a significant decline in employment in the heat pump sector and the solar thermal sector. Overall, there is a slight increase in jobs. I now pass the word to Carol Kempa. Yes, thank you very much. I'm gonna present the chapter on the investment indicators that we are mainly responsible for. So, what are the investment indicators about? Well, basically, you can split it up in three different areas. So first, we look at investments in renewable capacity, so investments into renewable energy power plants. Then we look at the investment and performance of renewable energy firms and assets and investments into those firms. And the third pillar are case studies on innovative financing schemes. So starting with the first point, investment in renewable energy capacity. So what is the basic methodology that we do? So we estimate and calculate the investments in RES capacity for all power plants larger than 1 megawatt in all EU 28 member states. And we do this by member state, and on the next slide there will be an example. To the right I've presented the results on an EU level. So what you can see is overall that in the EU-wide the investments in renewable energy capacity dropped from 46 billion in 2016 to 27 billion in 2017.
so quite a significant drop. However, this should be seen in the light of the last years, because this 2017 investments are still higher than all the investments in 2014 and the previous years where we recorded them. So 2015 and 16 being quite high investments, record years, but yeah, 2017 is still not overall such a low number. And you see quite heterogeneous developments across RES. So, well, you see that photovoltaic, for example, remains relatively stable. We've seen between both years quite a high drop in investments for biomass power plants, for example. And overall, as could be expected, maybe, is that wind investments dominate overall investments in renewable energy capacity between both years, and in particular wind, offshore wind has a very large share, and particularly in 2016. Here is just on the right one example of more detailed result. As I said in the report, we presented by member states, so we present investments and capacity and the number of projects this was invested to and the associated capacity added. So here on the right you have the example for wind, for example. So you can see here, if you look in Germany in 2017, overall 8.8 billion were invested in 271 new projects and leading to an associated capacity added of more than 4 gigawatts. And this is presented for all other technologies as well in the report. What we as well do is a comparison of the EU and other trading partners with respect to the average investment expenditures, so how much is actually paid for 1 megawatt of new capacity. And we compare this with main EU trading partners, including, for example, the US, China, India, and so forth. What we can see is that for solar PV in 2016 and 2017 in the EU, the investment costs are lower than in the other its main trading partners. Looks slightly different for wind. For onshore wind, where in 2016 in the EU investment expenditures were higher on average, but lower than the main trading partners in 2017. And for both technologies, we've seen between both years that in the EU the investment costs seem to decline. Now a bit words on investments and performance in RES firms, the second big part of our chapter. So what we first do is we look at venture capital and private equity investments in RES firms. So this is the amount of money venture capital and private equity funds invest in young renewable energy startup companies, so technology companies. And these investments dropped slightly from 2 billion in 2016 to 1.6 billion in 2017, and we can see in both years that the highest investments were in the solar sector. While in previous years, in several years, wind saw the highest investments. And the last part on this part of our chapter is the performance of renewable energy firms and assets. On the right, you have the example of renewable energy firms. So what we did is we collected for the wind sector, the solar sector, and the bioenergy sector, the respective 10 largest firms active in this area in the EU, and constructed revenue-based indices to track the performance of the firms in this sector. And what we can see overall is that bioenergy and wind firms seem to have performed quite well, in particular in the last 2 years that we recorded, compared to firms in the solar sector that performed worse, but the trends seem to have stabilized in the last years. And what we also have in the report note here is the performance of yieldcos. So these are firms that only have renewable energy projects in their portfolio and sell shares on the stock market, but more on this in the overview barometer itself. And maybe as a last point, although it's not included in our main report, just a small hint on our case studies on innovative financing schemes. So these are published annually in September and available on our EurObserv'ER website. And here we look on specific cases of innovative financing schemes. So in 2018, those 3 case studies were published. So landlord to tenant electricity supply in Germany, ESCOs and third-party financing for solar heat for industrial processes, and yieldcos in the EU, where you find more information on yieldcos. The next will be available in September this year, and on the website you can also find older case studies that were published in previous overview barometers are also available there online as PDF. Thank you very much, and now I pass on to Luc Burskens to speak about renewable energy costs, prices, and cost competitiveness.
Thank you, Carol. Hello to all. My name is Luc Burskens. I'm a renewable energy consultant at ECN, part of TNO.
Hello, I do not hear you right now. Luc?
Yeah, no, I was...
Here you are.
Can you please pass on to the next?
Sure.
Yeah, okay. Good. On renewable costs, prices, and cost competitiveness. So first of all, many factors determine the cost of renewable energy. There are no single technology costs, but instead we see cost ranges varying across technologies and across countries. The parameters used for estimating renewable cost is the levelized cost of energy, LCOE, which you see here in the graph as well. The picture displays the estimated renewable energy production costs. The light blue ranges with the darker small blue line to represent the average value of the renewables LCOE, and the graph also compares these to the energy price of the relevant conventional energy carriers. These are the pink ranges representing the average reference energy carrier price. For the LCOE estimations, we used the following underlying parameters, among others, capital and operational expenditures, fuel costs, annual energy production, etc. And the conventional energy carrier prices are based on statistical sources, and these exclude taxes, levies, and external costs, and for heat, efficiencies were used to quantify end-user prices. Country dependency was modeled using country-specific energy yields, biomass prices, and weighted average cost of capital. In the Overview Barometer, edition 2018, we also present modeled LCOEs for the reference years 2005 and 2010. So focusing now on the outcomes for 2017, as they are reported in the graph at the right, and of course also in the state of renewables in Europe. So relative to the wholesale electricity price, solar biomass power, deep geothermal power, and hydropower seem to be most competitive. Large-scale commercial PV may, in some countries, compete with electricity prices, depending on the markets where they are applied. And least expensive for heat production is heat from solid biomass. And renewable transport costs seem not to be competitive to the reference prices used. A final remark on the LCOE. The comparison presented here is without subsidies and without external costs, as already mentioned. And including these aspects will change the picture completely. So let's now move to the next topic, avoided fuel cost and avoided fuel use. Thank you. Yes, this slide, please. So the avoided fuels in this analysis have been defined as non-renewable energy carriers that are not consumed. So it's mostly fossil fuels which are which have been displaced by renewables. We estimated cumulative amounts of avoided fossil fuels, and we multiplied these by corresponding fuel price levels observed in the various countries to find the avoided cost or the avoided expenses. For 2016, the EU28 amount of avoided fossil fuels was estimated at 314.9 megaton oil equivalent MTUE, resulting in 48.6 billion euro of avoided expenses. And now, in the new update for 2017, the EU28 amount of avoided fossil fuels slightly increased to 322.1 megaton oil equivalent, resulting in 93.5 billion euro avoided expenses in that year. And the pie chart, the pie chart shows the largest contribution, which is from solid biomass and heat, and from electricity, from hydro, and from wind power. And of course, in the overview barometer, you will find a full chapter which presents all the details in this analysis. Thank you. Thank you for your attention, and let's now move to the next speaker.
Thank you very much, Luc. Yes, we hand over to Barbara Breitschopf from Fraunhofer EC. Barbara, are you there?
Yes, I'm here. Welcome to everybody. I'm a senior researcher at Fraunhofer RSI, and we have looked at 3 questions regarding renewable energies. And the first question we are looking is at how competitive are we in the renewable energy technologies, or the other way around? Do we use that, and do we have an advantage from deploying renewable energy technologies in the EU? And to answer this question, we have, yes, thanks for the next slide, we have looked at a trade share. So how much do we trade compared to other countries in the respective renewable energy technology? And overall, if you look at all renewable energy technologies, we find that China is leading the share as well as the volume. But if we look at the different technologies, the picture is a little bit different. Here you see a graph showing the shares of the shares by country for PV, for wind power and hydropower in red, in blue, and in green. And you see that in PV, China has the strongest position, followed by the EU and Japan. While in the wind sector, still the EU is very strong, especially Denmark, Germany, and Spain. But the volume is smaller, the total volume traded, than in PV. In hydropower, the overall export volume is small. The EU is leading still, followed by China, and among the EU countries, Austria, Germany, Italy, and France are strong. Overall, we can say, looking at our question, the EU is still competitive, but China is keeping up and is getting more and more competitive, and it remains competitive in the PV sector. Our second question we are looking at is in the heating sector. The question is, how is the development in the reheating sector, especially in light of the long life cycle of those renewable energy technologies in the heating cooling sector? There are slow changes because of this long life cycle of these technologies. And the first indicator we have used or look at is the market sales share. A market sales share shows in the actual year which mix of technology has been sold in the different countries. Those heating and cooling technologies in the country shows though the actual changes. For example, let's look at Belgium in the middle here. Let me use the arrow here. You can see that in 2017 a large share of heating technologies has been condensing gas standard oil. This has been newly installed or replacements, while a small share is from heat pumps or from solar power. In other countries, for example, in Estonia, Sweden, or in Finland, the share of heat pumps sold in 2017 is very high, so there's a high dynamics in heat pumps, while the dynamics in biomass is modest or low and very small even in Eastern European countries. And the dynamic in solar energy is in some countries strong, like in Denmark, and in other countries rather weak. Overall, we can say, well, there is some kind of dynamic, but this only happens in a few countries. The majority shows a strong focus on fossil-based heating and cooling here, and this in the market, and this this technologies that have been sold in 2017 will last for at least 20 years. So I think the dynamic is not enough to really change the situation in the market, in the heating sector. Our second indicator we are using is the consumption share. This share focuses on the actual status quo, so it includes all the existing buildings and so on. And the picture we had from the market sales share is confirmed here again. We see a strong dominance of the fossil fuel-based heating cooling system, and only a small development, a small share of heat pumps and solar thermal energy. What is still strong is biomass because of this long history in some countries, and also strong is the district heating. District heating per se is not renewable based, or it might be a mix of both fossil and renewable based. That's why we looked at this share in more detail. We were curious, and that is our third indicator we're using, the technology mix in district heating. Here we look at countries that have at least a share of 10% or more in district heating consumption. And then we looked at their mix of the technologies in district heating. For example, Finland, here we find that it has a large share of biofuels in district heating, some share of excess heat, but also quite some share in coal or fossil-based fuels. Overall, the picture is similar as to the consumption share, a strong dominance of still fossil fuel-based fuels, and some biofuels also contribute in some countries a significant amount, and all other technologies are very small, contribute only minor shares. So coming back to our question, we can say that there's a slow development. Dynamic is strong in a few countries, but not in all. It should accelerate the development, especially in the Eastern European countries, so that we really get a higher renewable energy share in the heating and cooling sector. Now let's go to our third question. This has been the question: how do or can the different countries and markets handle the a high share of volatile renewable energy? So are the systems at its limit regarding the flexibility that it's needed to integrate the renewable energy? So we selected two indicators for that. The first one you see here is the share of flexible generation capacity used in critical hours compared to the total available flexible generation capacity for each country. And here you can see that even in critical hours, only a few countries use about 75% of their flexible generation capacity. So there's still some room or space for increase. And we say from that point of view that there's no risk, no challenge yet at the moment in critical hours for the flexible generation capacity. When we look at the market, and that's our second indicator, we look at the intraday market and look what the traded volume has been in the intraday market during those critical hours compared to the maximum value we had in that year. We find that, well, in a few countries, maybe in Austria, Germany, and the Netherlands, the traded volume lies above 50% of its maximum value. We see that there is even this mechanism to adjust shorthand changes in the generation or load is not that much used during critical hours, and then we conclude that even there's no problem at the moment during those critical hours. And that is from our point, and is the question: how stressful is the situation with the renewables? And we can say the stress is not that strong as we thought it might be. This is the end of my presentation, and I thank you for listening.
So, Barbara and all the speakers, thank you very much for these insights and the main results of the report. Before we respond to some of the questions that have been posted in the chat, I would ensure you that this presentation, these slides, will be made available on the project website on www.EurObserv'ER.org, where you can also download the report. And there is also a methodology report that is underlying the socioeconomic indicator calculation by ECN, which is also ready for download. You will find the press releases to all of this presentation. You can subscribe to that. And just recently, we have updated the database where you can also freely download all the data and figures in terms of capacities, energy generation, employment, investment, costs, avoided fuels. This is all ready for free download on the website. And you can be sure that also this recording and this slides will be uploaded there soon. So I see from the chat that there has been a question been asked by Jill. It is about the employment effects, and the question was why solar thermal and heat pumps were decreasing in terms of employment. I will hand over to Mark. Mark, can you respond on this question?
Yes, thank you, Roman. And thank you for the question. The reason is that it's related to the amount of installed capacity each year, which has been declining. And the amount of installed capacity generates revenues because you install new installations that you have to pay for, and these revenues in turn generate jobs. So because the amount of installed capacity per year is declining, the amount of employment is also declining. To make it more concrete, there was an annual installment of 3 gigawatt solar thermal in Europe in 2016 installed, and this was only 1 gigawatt in 2017. So that explains the decline in employment.
Thanks, Mark. There was another question. I do not know if you can respond immediately to that concerning the definition of a bioenergy firm. So what is understood under the bioenergy firm? Is that running a power plant on bioenergy? Is it the provision of the biomass supply? Can you just give a brief response to that question as well, Mark?
Sorry, I think this was a question for me on the investment.
So I give the word.
Carl, go on. Yes, sure.
Yeah. Okay, so this was the question, what the bioenergy firm is. I think it came during my presentation on the indices. Yeah, a very good question. Maybe I could have formulated this a bit clearer. So it is, in fact, those are firms that are producing equipment for bioenergy plants. So this is like the two split I tried to say. So in the first part with investments, we invest actually how much is invested into new capacity, and in this part where we look at venture capital, private equity, and our RES indices, those firms are the producers of equipment. So either like producers of equipment for windmills, for solar PV, and those bioenergy firms are then producing any kind of equipment you need for biogas installation, for biomass power plants, and so forth. So these are the producers of equipment.
Okay, thanks for this explanation. Is there other questions coming up in the chat? Let me see. Okay, Verle says that is clear. We had a question from the chat asking for, let me pick up on that. Yes, how comes that the wind power cost per megawatt is increasing outside of the EU? I think this is also directed at Carol.
Yes, this is also directed at me, I guess. Yes, thank you for this question. It's actually a good one, and this is, in fact, I have to say I can't really give a definite answer to, because the issue is once that there are always between years a bit of fluctuations because there are not too many observations that we have or like investments we observe. And if you look at the figure, maybe if you download the slides again, it was very zoomed in, so the difference actually not so high. So it increased from 1.39 million to 1.41, so like by 20,000 euros per megawatt. So this could be just simply due to maybe differences or changes in currency exchange rates, because we have the data translated all into euros, or just a random small fluctuation, because you always or often see between years that it goes a bit up or down. If it would be a longer trend, one explanation could be that maybe the most attractive locations are gone, and this might have like an upward pressure on the investment costs, but I don't know. This would be just a guess that I don't see in the data, so it could be just a fluctuation, a small fluctuation that you see due to exchange rates, for example.
Thank you very much, Carol, for this elaboration on that. I see that there's another question coming up from Fitria in the chat. Let me see. The EU starts to implement the tender system in renewable energy electrification. What is the impact to the renewable energy investment?
I mean, I could answer. I'm not an expert on that. It would be highly speculative. I could imagine that it might reduce it a bit, or on the other hand, you could see in some countries where you knew that feed-in tariffs, for example, would run out, or there would be a reform that would reduce feed-in tariffs, that you see a lot of investments at the late stage to like profit still from high and attractive feed-in tariffs. So it could be that this might reduce them, but this is just speculative. I mean, this is the one thing with feed-in tariffs that you observe, that there's always like increases in investments shortly before feed-in tariffs are expected to go down.
Yeah, thanks, Carol. Thanks. So there's a quite interesting, thanks by the way for the audience for participating and contributing to this webinar with your critical questions and the interested questions. There's one. Adam Sharkawi asks, is wondering whether a country can totally depend on renewable energy. Is there a limit? Is there a theoretical limit on the use? I guess, Barbara, you would be possibly an expert responding to this.
Thanks for this question. It's a good one. Of course, we can have 100% renewables. It depends always on the backup system you have, on the balance system you have. For example, you could use storage to balance unforecasted changes, or you could install much more capacities in PV and wind, for example, or in biomass than needed to use them when there is an unforeseen change in the load. So yes, you can use and have a system with 100% renewable, but it might be maybe more expensive than one based on a conventional full backup sources like gas plants or so on. So it's feasible, and in some countries it's competitive and not more expensive, and in other countries it might be more expensive and maybe not that competitive. I hope this helps to clarify the question.
And from Frédéric Thuillier from Observer, we can add about this question that for France, for example, there is a specific scenario from the ADEME, which is a French agency for energy efficiency and renewable energies. And according to this scenario, 100% energy generation from renewable sources is possible for a country as France, with a very strong energy efficiency policy and a very large renewable sector development. But it's just a potential scenario, and it's for 2050. At the horizon of 2050 year.
Right. Thank you, Frederic. There is some more questions popping up here. I think that we will not be able to answer all of this as we are approaching the end of this 1 hour, but I would take a last question. It's concerning the profits. The profits in PV are much lower than in other sectors. How could I interpret this? Lendert van Doorn asks. So this one is, I guess, is directed at Carol again.
Yeah, I would guess so that this is related maybe to the performance of PV firms. Again, difficult to guess. I would argue that one argument could be that I think the price decline was the highest in the PV sector over the last years. So the prices of PV modules dropped drastically, which is good for anyone who wants to install a PV plant. So this becomes more attractive, but it's of course a difficult situation for those who produce those modules, plus pressure through imports from other countries where those can be produced even cheaper. So what we've seen over the last years is that quite a few of also larger firms went bankrupt or struggled a bit compared to the other sectors. So this could be an explanation why PV firms struggle a bit. Although again, the trend was downwards, but it seemed to stabilize. But yes, they seem to have perform overall and have lower profits compared to firms in the wind and the energy and the bioenergy sector.
If I may add to that, when you look at the trade slide, you see that in PV there's a huge volume is traded internationally, and the competition is very, very strong, and especially China is leading in that area. So those firms are really under pressure, and if there's a strong competition, normally the profits are down. That's typical for neoclassical theory. Thanks.
Very good. Thank you, Barbara.
Yeah, thanks a lot. Barbara, maybe very briefly, one last question was directed at the flexibility of the electricity system. So Anna Maria asks, what could the main contributors be for a successful increase in flexibility of electricity systems? So is it the storage systems, or is it rather a good mix of different renewable energy sources? How to integrate renewables into the grid successfully? A very quick answer.
I think there's not one right answer for all countries. It depends always on the situation and the potential you have and the needs you have. But in general, I think there's always a mix of different renewables and storage systems. And of course also on the load side, that there might be flexible loads, a mechanism that allows to change your load and adjust your consumption to the price system, to the scarcity. So it's a combination of different factors, not only one, the storage system, the renewable sources, and load response or load management.
Thank you very much, Barbara. Right, I think we have come to the end of this live webinar on the results. I see that there's some chat going on, some questions. We try to respond to your questions, but of course this could go on and on. If you have questions, well, first of all, I hope that our report, the State of Renewable Energies in Europe, might answer some of those, or the accompanying methodology report and our thematic parameters on the single technology. I thank you very much for you being here and for contributing to this interactive live webinar. Quite interesting to discuss that with you. Thanks to all the speakers also, and it's my final word is just to point you again at the EurObserv'ER website, where you can subscribe, you can leave your email, so you are informed about all new publications being published and released. You can download all the data for free, and of course you can also review this webinar and get the slides of these presentations. Also, you can respond to us, to Diane Lescot, EC email, or to the project partners. If there's immediate questions, we try to respond to that, try to answer that. So, that's it from my side. Diane, do you also want to say something? Goodbye to our audience.
Thank you very much, everybody, for staying with us the whole time. It's always very nice. And also, I would like to point out that you can register in the email alert at the end on our website to be informed of any new publication on our site. Thank you very much.
So, thanks a lot to all of you. Hope to see you again next year, and we are welcoming your feedback also on our publications. So stay tuned to EurObserv'ER, and maybe we'll see each other again next year in the next live webinar and when the next report has been released. Bye from here.